So we're going to talk about debits and credits and a T account, right? So up until now, we've simply had, did my cash increase, did my cash decrease? But now we're going to get a little more in depth. And I want to kick it off with this video, maybe. So if you could give me your undivided attention, please.
So what is ClickUp? ClickUp is an all-in-one productivity software where you can manage everything and anything.
Building your online business? Go to Wix.com and set up.
Oh, cool. All right, here we go.
Welcome to AccountingCorner.org channel. Today's topic is T accounts. T account is a great way of general ledger accounts visualization. T accounts have their names due to the form of visual presentation, that is T form. Each general ledger account is presented in the T form. Each account has a name and two sides. Left side is debit side. Right side is credit side. Usage of T account is a very good way to visually explain double entry accounting principle. T accounts also help accountants to better understand complex, complicated transactions and their impact on different general ledger accounts. In order to understand the essence of T account better, the following example is used.
So this would be what? Purchased asset on account. Your asset here would be inventory, right? So instead of just simply writing inventory 1,000, we're now going to say whether it was a debit or a credit.
Company buys inventory on account for $1,000. Inventory is acquired on credit, and payment will be done later within the terms agreed with the supplier. The following accounting entry to be posted. Debit to inventory, 1,000. Credit to accounts payable, also 1.
So we're about to learn that assets increase on the debit side and liabilities increase on the credit side, which is why you see $1,000 get placed on the debit, and for accounts payable, 1,000 on the credit.
1,000. Here is how this transaction is presented in the T accounts. Each account has its name. Inventory and accounts payable. Debit in the inventory account is on the left side. Credit in accounts payable account is on the right side. For more knowledge on account.
Alright. So, starting on the note sheet, let's talk about what is a debit. So on page 32 of your book, a debit is an amount recorded on the left side of a T account. So you have your T chart. You have your account name up here. And then if you want to write D and C to help yourself remind, or debit and credit. So debits are increased on the left side of your T account. Okay, so number one, left side. Which would mean your credits then get increased on the right side, right? So debit left, credit right. Okay? So, which part of the accounting equation, you have assets equals liabilities plus owner's equity. Which part do we think gets increased on the debit side? If you just had to guess. Liability. It's actually assets. So you can think about it very similarly to the equation. Everything on the left side of the equation is going to increase with debits. Everything on the right side of the equation is going to increase with credits. So if we purchase supplies, or if we get inventory, or we purchase raw materials, whatever it may be, those accounts will go up on the debit side. If we receive cash, yeah, Wes. Assets increase on the debit side. So number three, assets increase on the debit side. And then liabilities and owner's equity would increase on the credit side. So for number four, liabilities, and owner's equity. Increase on the credit side. So it's very similar to the equation, right? So you have assets. You have assets equals liabilities plus owner's equity. So everything on this side of your equation is going to increase on the debit, on your assets. Everything on this side increases on the credit. It's very similar to your T account. So if assets increase on the debit side, then the reverse of that should be true, right? That they will decrease on the credit side. So if I were to lose cash, I would be losing an asset or decreasing an asset. So I would credit that asset. If that makes sense. So number 6, assets are decreased on the credit side, which then the reverse of that should be true, that liabilities and owner's equity are decreased on the debit side. So if my account name was cash, let's say I received cash from an investor. Well, that's an asset, right? So would I debit or would I credit? Debit, yes, because it's an asset, right? So I would debit whatever that amount was. Okay, let's say I paid cash for an expense. Okay? So I'm losing, let's say $50. How would I mark that? I'm decreasing an asset. If I increase on the debit side, how am I going to decrease this asset? The credit side, yes. So I simply just write $50 on the credit, which would then give me a balance of what? $50, right? If I was at the end of my problem, I would have $50 of cash left. Okay? So let's those 9 business transactions we've been talking about, let's talk about those. So we have what? Received cash from investing. Or what was the first one there? Receiving cash from sales. Okay. What 2 parts of the accounting equation were affected with this? Yeah. Cash and owner's equity, okay? So now, remember we always had to do 2 things. Now we're going to have 1 debit and 1 credit. So we know that cash and owner's equity are getting affected from us receiving cash from sales. What do we think is going to be debited? Cash or owner's equity? Cash, why? Yeah, it's an asset, so it's going to increase on the debit side. And then, as you said, owner's equity would then be increased on the credit side. So cash will be debited, and owner's equity will be credited. Does that make sense? So our first transaction down here at the bottom where it says receive cash from sales. Cash is going to be debited, and owner's equity will then be credited because they're both increasing, right? Somebody gave us $700. We now have $700 more cash, plus our owner's equity increases $700. Assets increase with debits, owner's equity increase with credits. All right, so let's do the next one. Received cash from investor. What do we think is going to be debited and credited? Which two parts of the accounting equation were affected when we received cash from the investor? Wes? Owner's equity and cash again, right? What's going to be debited? What's going to be credited? Yeah, it's the exact same thing. Cash is debited, and owner's equity is credited. It's exactly the same. Our source of cash just came from a different place. All right, let's talk about paying cash for any kind of asset. So paid cash for any asset. So if we pay cash for supplies, it's the one we've been working with, or maybe we got some inventory or raw materials, whatever it may be. What do we think is going to be debited? What do we think is going to be credited? Let's. What? Our cash is going to be credited, yes, because we're decreasing an asset. So we spent X amount of dollars on cash, so we don't have that cash anymore. It is now going to be recorded as a credit. So what is going to be debited? Weston? Whatever asset you purchase, yes. So asset purchase. So we got rid of cash for our asset, so now our asset increases, our cash decreases. Does that make sense? All right, pay cash for an expense. What do we think is going to be debited? What do we think is going to be credited? Pay cash for an expense. Linda?
Cash credited.
Cash is not going to be debited. If we debit cash, credited, yes. Sorry, I misheard you. Cash credited, yes. Because we're losing cash. What's going to be debited? What other piece of the accounting equation was affected when we did this? Owner's equity, yes. For now, as we move on and get further, this will actually be your expense account, but for now, it's just going to be owner's equity. All right, so when you pay cash for an expense, your owner's equity gets debited, your cash gets credited. We're losing cash, therefore we're losing owner's equity. All right, buying an asset on account. What does buying it on account mean? Somebody tell me. Anybody? Purchased at a later date, yes? We're not paying them that money right now, we're promising to pay them later. So if we buy an asset on account, what do we think is going to be debited and what is going to be credited? No. Why would the asset not be credited? That would be decreasing an asset, right? We are increasing this asset because we just bought it. So we didn't have any supplies, now we have supplies. So we are going to debit your asset purchased. And then which account was tied to this? Buying on account? Accounts payable, which is a liability. So accounts payable will be credited. So when we buy an asset, buy supplies, really it's the one we're going to work with the most. We are going to, whatever asset we purchase will be debited, and then our accounts payable will be credited. Okay, what if I paid cash on account? Paid cash on account. What's going to be debited? Yeah, Weston. Cash is going to be credited, yes, because I'm losing cash. It's not going to be owner's equity. What? Remember, which account is tied with on account? You just wrote it down? Accounts payable is going to be debited because we're paying cash, so that means we don't owe them as much money anymore, right? So that is a liability that is decreasing. So when we pay cash on account, you're going to debit accounts payable and credit cash. Okay? All right, we've got 3 left. And then we'll do some problems. All right, we sold services on account. What do we think is going to be debited? What do we think is going to be credited? Johnny boy, what do you think? What are we going to debit? Accounts what? Accounts receivable, yes, because that is an asset, right? We're increasing assets. So we're going to debit accounts receivable. We got to credit something. What are we going to credit? What do we think? It's actually, what?
Will it be services?
No. It's going to be, let's see. It's going to be your owner's equity because we're increasing it, right? Owner's equity increases with a credit. So we're going to credit our owner's equity. Because somebody's promising us to pay us that money, so we now are worth more. So let's say I go down to a local business, I do their driveway for them, and they give me a written promise or a memo or whatever that says they're going to pay me $1,000. I'm now $1,000 richer. I just don't have that money in cash yet, right? Okay, what if I received cash on account? So they owed me $1,000, now they paid me some of that, right? How am I going to record that with debits and credits? I received cash on account. Debit cash, yes, because I'm receiving cash. Yep. Yes, we're going to credit accounts receivable because we are decreasing an asset, right? So they don't owe me all that money anymore. So while I'm gaining cash as an asset, my accounts receivable asset is decreasing. So when I receive cash on account, I'm going to debit cash and credit accounts receivable. All right, our last one, and then we'll do some problems. When you do an owner's withdrawal, which actually means what? Withdrawing cash for owner's personal use, right? But I'll just shorten it to owner's withdrawal. What do we think is going to be debited? Yeah.
Cash debit and owner's equity credited. Owner's equity.
We're taking cash out of the business, right? So to decrease cash, it's going to have to be credited. Therefore, we are depleting our owner's equity or decreasing a liability or an owner's equity account. So to decrease owner's equity, if we look at number 5, owner's equity, right? So when you do an owner's withdrawal, your owner's equity is debited, your cash is credited. So, which side of the T account is on the left? Debit, yes, which would make the right side credit. Okay, that practice problem worksheet I gave you. Let's do number 1. These are going to be set up very similar to the ones we've been doing. And I'm going to have us do it on Excel. So if you can get Excel opened up. All right, I'm going to set up a template for y'all, and then we'll make sure you copy and paste it and put it on the second sheet. And that way you won't have to keep formatting it every time. So let's highlight A and B. I'm sorry, A through F. A1 through F1. You're going to hit merge and center. And then you're going to type assets. G1. You're going to go apostrophe equal sign, enter. And then make that column skinny. Resize it. We only have one liability, so all we need to do is H and I. H1, I1, highlight them and merge them. And type liabilities. In column J, we're going to put apostrophe plus and hit enter. And then go ahead and resize that and make it skinny. And then you're going to highlight K1 and L1, merge and center, and write owner's equity. Yes. You need help? For those of y'all that are ready, here's where this is a little different. Okay, we now have two sides, right? It's not simply just a cash account. So in A1 and B, or I'm sorry, A2 and B2, you're going to want to merge that. And that's where you're putting account title. C2 and D2, you're going to want to merge that. That's where you're putting account title. E2 and F2, merge that. That's where you're putting account title. H2 and I2, merge that. That's where the account title will go. And then K2 and L2, merge that, and that's where account title will go. I'll put borders to make it a little easier for you to see. Right, so these will be our account titles. Then we'll write debit, credit, debit, credit, debit, credit, debit, credit, debit. And if we happen to have more than 3 assets, we can just do it down below here. All right, what's up, Peyton?
Got kind of gone in the butt.
Yeah, merge them. Liabilities. Yeah. Yeah, do a smart pass. Apostrophe plus. Enter. Or that, yeah, that's fine. Owner's equity. Or, I'm sorry, yeah, merge them. Merge Cano. Owner's equities. All right, now go ahead and merge A2 and B2. Merge C2 and D2. We're just doing it by 2s because we're gonna have a debit and a credit side, right? So now E2 and F2, H2 and I2, and then K2 and L2. Yep. And now in the rows below them, just write debit, credit, debit, credit. Left side's debit, right side's credit. All right, we all got this? All right, if I were you, what I would do, I would highlight this, copy and paste it, put it on the next sheet, that way we have it saved as a template. So I would copy and paste it down to wherever you're comfortable. Make sure we put that on the next sheet. That way we have it. All right, let's look at problem 1. Here we go. It says we received cash from an investor. So if you look at your note sheet, when we receive cash from an investor, what gets debited? What? 600, yes, but what is going to get debited? If you look at your note sheet, when we did receive cash from an investor, what got debited? Which account? 600 of what? Cash, yes. So our first asset is going to be cash. And we are going to record 600 in the debit side. For every debit, I need a credit, correct? If I received cash from an investor, what gets credited? Look at your note sheet that we just did. Owner's equity, yes, owner's equity will get credited, 600. Okay, if I paid cash for supplies for $250, what's going to get debited? Which account? If I paid cash for supplies. What? Crash is going to get credited, yes. So let's go ahead and do that. And now something needs debited. What's it going to be? No. The asset we purchased, yes, so we purchased supplies. So we now have a new asset account, supplies. And that is going to be debited. So previously we would have just done the mental math on cash, but now we have actual decreasing and increasing sides. Okay, then I sold services on account for $475. What is going to be debited? By sold services on account, what's going to be debited? Accounts receivable. Yes, we now have a new asset account. Accounts receivable. And that'll be debited for $475. Every debit needs a credit, right? So what are we going to credit? What do we think? Owner's equity, yes, because it increases with a credit. So you do not have to do the math here because we are now moving on. Or previously I would have made you, but now we can just write $475 in the credit, and we'll do the math later. I told you it was going to get better. Okay, we did an owner's withdrawal for $200. What's going to be debited? Hey, Catherine, how you doing? You said what? Okay, go ahead. What's going to be debited with an owner's withdrawal? Owner's equity, yes, because we are decreasing owner's equity. So, 200. All right, every debit needs a credit. So what are we going to credit? Cash, because we are decreasing cash. And lastly, we received cash on account for $300. What are we going to debit if we received cash on account for $300? Cash, yes. What are we going to credit? Accounts receivable, yes. Okay, so previously when we would finish up these problems, you would get your account and then your amount. So just carry down cash, and now you can do this two ways. You can set it up as an equation, or you could simply just do it with a calculator. It's going to be 600 minus 250 minus 200 plus 300. So however you'd like to arrive there, I'm going to do it as an equation, but however you get to this number is fine with me. If you're doing an equation, it's just minus the sums of each other. So 450. You can do it with a calculator. However you're going to arrive there, you add the debits, you subtract the credits. For assets, right? For liabilities and owner's equity, we would add the credits, subtract the debits. Okay, supplies, we only had one entry. So that is simply going to be 250. Carry it down just as we have been. All right, accounts receivable. We have two entries. We had a debit for $475 and then a credit for $300. So what's my total balance going to be? Credits decrease and debits increase, yes? 175. So if you can arrive there however you like. I'm going to use an equation. I'm going to hit equals this number minus this number and hit enter. All right, we didn't have any liabilities, so you don't have to write anything there. And then for owner's equity, they increases on the credit side, yes? So we're going to add the credits and subtract the debits. So add your credits, subtract the debits. Now what do I do to make sure that I didn't screw up? Add both sides, make sure they equal. So 875 equals 875. Story checks out. What's the last thing I got to do to make it look nice? Put it in accounting. Yes, please. All right, let's do one more together. Try to squeak it in, yeah. You said what? The papers, no. Just turn in the horizontal and vertical analysis. I didn't put a spot on Canvas yet for it. All right, let's do number 2. Real quick, we got 5 minutes. Let's try to get a part of it done. Okay, if we sold services on account, what gets debited? Sold services on account, what's going to be debited? Accounts receivable, yes, that'll be our first asset account. What gets credited? If we sell services on account, what gets credited? It would be our owner's equity, right? Because we're increasing our owner's equity. For every debit, you need a credit. All right, if I received cash on account, what's going to be debited? If I received cash on account, reference your note sheet if you have to. Cash, yes, so we have a new asset account. And that will be debited for $350. All right, what's going to be credited? What'd you say? Yes, accounts payable. No. Accounts receivable, yes, for $350. So debit cash, credit accounts receivable. Okay, if I paid cash for a heating bill, or which is an expense, what's going to be debited? If I paid cash for an expense of a heating bill. What's going to be debited? Look at your note sheet if you have to. Paid cash for an expense. Owner's equity, yes. Because we're decreasing our owner's equity. So that was $100 in the debit of owner's equity. What's going to be credited? Cash. Because I'm decreasing cash. And lastly, I bought supplies on account. What's going to be debited if I buy supplies on account? Supplies will be debited. So we have a new asset account. And that was for $325. Okay, what's going to be credited if I buy supplies on account? No, the other one. Accounts payable. Yes, we now have a liability account. Accounts payable. And that was for $325. All right, go ahead and get your ending balances. So for accounts receivable, we're going to end at our debits minus our credits. For cash, we're going to end at our debits minus our credits. And we only had one entry for supplies, so it's just $325. Accounts payable also only had one entry of $325. And then for owner's equity, make sure you add the credits and subtract the debits. So you're subtracting debits from credits. And make sure those two numbers equal each other. 725 and 725. We're looking pretty good. And as always, put it in accounting. Okay, so we got like 45 seconds. Normal balances, when they increase on that side, what would be your normal balance for your assets? Is it a debit or credit? Normal balance is when it increases on that side. So for assets, what would be their normal balance? Anybody? Carol, what's a normal balance of an asset? Yeah, what, like when it's positive, when an asset is positive. Is it debit or credit? Debit, yes, your normal balance for assets are debited. So what would be your normal balance for liabilities? Credit. What? Oh, liability. Normal balance for owner's equity. Credits. Yes. Thank you. Thank you.